Ethereum is once again in the spotlight as we look ahead to 2025, and investors are asking the big question. Can ETH reach new all-time highs, or are we heading for a major pullback? According to analysts, Ethereum's price trajectory is sitting at a crossroads. On one hand, recent performance has been strong, with ETH showing resilience above key support zones, benefiting from growing institutional interest, Layer 2 adoption, and Ethereum's evolving role in the broader blockchain ecosystem. But on the other hand, macroeconomic headwinds, network congestion concerns, and shifting sentiment could bring turbulence before any sustained breakout occurs. So, let's break it down. As of now, Ethereum is trading just above $3,700, a level that many believe is critical. If ETH can hold above this zone and gain momentum, analysts see a path toward $4,500 and potentially $5,000, driven by demand for smart contracts, staking rewards, and broader use of DeFi protocols. Another key driver is Ethereum's unique position as a deflationary asset. Thanks to EIP 1559, Ethereum now burns a portion of transaction fees, gradually reducing supply over time. Combine that with staking mechanisms and upcoming upgrades, and the long-term fundamentals are looking bullish. But not everyone is convinced. Some experts warn that ETH's recent run-up may be overheated, especially if broader market conditions shift. Concerns about US inflation, interest rate adjustments, and regulatory uncertainty could weigh on crypto as a whole, including Ethereum. There's also the issue of competition, with networks like Solana, Avalanche, and newer chains like Sui and Aptos gaining traction. Ethereum's dominance in the smart contract space is being challenged. Gas fees, while lower than in the past, still remain a sticking point for many users. That said, Ethereum still holds a massive edge in terms of developer ecosystem, TVL, and real-world adoption. Major institutions are building on it. DeFi, NFTs, and tokenized assets continue to rely on its infrastructure. And with continued Layer 2, scaling via platforms like Arbitrum, Optimism, and Base ETH, may yet defy the doubters. So, what's the bottom line? Ethereum's forecast for 2025 remains cautiously optimistic. However, any major market correction, regulatory blowback, or technical bottleneck could delay that path or send ETH back to retest lower levels. For now, all eyes remain on Ethereum's price action and the upcoming catalysts that could define its next big move. We'll be tracking it closely, right here on CRYPTOZARD News Today. Could XRP finally be ready for its long-awaited breakout? According to a growing number of crypto analysts, all signs are pointing to a massive rally on the horizon for Ripple's native token, and those holding tight might be in for a serious reward. A recent report suggests that XRP is showing clear signs of strength, both technically and fundamentally. Analysts are now predicting that 2025 could be a breakout year, with price targets significantly higher than current levels, and momentum steadily building beneath the surface. The optimism largely centers around a combination of chart patterns, historical behavior, and evolving market dynamics. XRP has spent the better part of the last 2 years consolidating in a tight range. But analysts argue this isn't a sign of weakness. Technically, XRP is forming what many believe to be a long-term bullish accumulation pattern, with higher lows and strong support around the 60 cents mark. But the real kicker: market sentiment and utility. Unlike many altcoins, XRP continues to gain traction through real-world partnerships and payment integrations, particularly in cross-border finance. With Ripple's legal battles mostly in the rearview mirror and the company pushing deeper into global banking infrastructure, confidence in the asset's future is rebounding fast. One analyst went as far as saying XRP holders will soon print, referring to the explosive gains early believers could be poised to see. That statement has gone viral across crypto, Twitter, and Reddit, stoking even more excitement within the XRP army. Still, it's not all smooth sailing. For XRP to truly explode in value, a few things need to align. Broader bullish conditions across the crypto market, increased liquidity and exchange activity, and perhaps most importantly, continued clarity around regulation. But if the stars do align, as many believe they will in the lead up to the 2025 bull run, XRP could finally break out of its slumber and rejoin the ranks of the top-performing alt. Whether you're a long-term believer or just watching from the sidelines, one thing's clear: XRP's moment could be coming. And 2025 may be the year it delivers. We'll be keeping a close eye on the charts, the news, and the market sentiment surrounding Ripple and XRP. Stay tuned right here for the updates that matter most. In a massive show of confidence for the crypto market, BlackRock has reportedly accumulated $1.4 billion worth of Bitcoin over a 6-day buying streak, fueling what analysts are calling a clear sign of institutional dominance in the current ETF-driven bull cycle. The investment giant, an issuer of the wildly successful eShares Bitcoin Trust, has continued to load up on BTC as demand for spot Bitcoin ETF shows no sign of slowing down. According to recent data, BlackRock has added more than 20,000 BTC to its holdings in under a week, bringing its total well over 300,000 coins. This aggressive accumulation comes as Bitcoin continues to hover above the $100,000 mark, showing remarkable resilience amid global economic uncertainty, U.S. inflation data, and broader market volatility. But it's not just about price. This buying spree signals a deeper shift in the crypto landscape, where traditional finance players like BlackRock are no longer just dabbling in digital assets. They're establishing a serious, long-term footprint in the space. And the timing couldn't be more strategic. Spot Bitcoin ETFs, which only received approval earlier this year, have quickly gained traction with both retail and institutional investors. BlackRock's IBIT has been one of the top performers, regularly bringing in hundreds of millions in daily. These ETFs are not only driving up Bitcoin demand, but they're also normalizing crypto exposure across mainstream investment portfolios. So, what's the takeaway? BlackRock isn't just responding to market trends, it's helping to shape them. By continuing to stack Bitcoin at this scale, the firm is reinforcing its belief that digital assets, especially BTC, are here to stay. Not as a fringe asset class, but as a core component of modern finance. Industry analysts say this kind of sustained buying activity could have a major impact on Bitcoin supply dynamics. With fewer coins available on exchanges and demand steadily rising, upward price pressure could intensify, especially as ETF adoption grows and more firms follow BlackRock's lead. At the same time, this move may further cement institutional control over the Bitcoin market, sparking debate about decentralization, accessibility, and the original ethos of crypto. While many investors welcome the price action and legitimacy these institutions bring, others worry that the crypto revolution may be losing its grassroots identity. Regardless of which side of the fence you're on, one thing is clear: BlackRock's $1.4 billion Bitcoin buying spree is not business as usual. It's a signal that the world's largest asset managers are going all in, and the game is rapidly evolving. We'll continue tracking this story and bring you the latest on how institutional players are reshaping the crypto markets. Stay tuned. In a historic move that could reshape the future of digital finance, the U.S. Senate has officially passed a landmark stablecoin bill, a major breakthrough for the crypto industry. The legislation, which received bipartisan support, marks the first time Congress has passed federal rules specifically targeting stablecoins. The digital assets designed to maintain a steady value by being pegged to fiat currencies, like the US dollar. The bill lays the foundation for how stablecoins are issued, managed, and regulated in the United States. Under the new framework, only licensed entities such as banks and qualified non-bank institutions will be authorized to issue stablecoins. These issuers must maintain 100% reserves, undergo regular audits, and comply with strict consumer protection and anti-money laundering standards. This move is being hailed as a milestone moment. For years, the crypto industry has pushed for regulatory clarity, especially around stablecoins, which power a massive portion of on-chain transactions, decentralized finance, and cross-border payments. Now, with this bill, Washington is taking its first real step toward embracing and regulating the digital dollar economy. According to lawmakers backing the bill, the goal is to strike a balance between innovation and safety. They argue that properly regulated stablecoins can enhance the U.S. financial system support, faster payments, and help maintain the dollar's global dominance, particularly in the face of growing competition from CBDCs and private digital currencies abroad. Industry leaders have reacted positively. Major players like Circle and Paxos are expected to benefit from the clarity and legitimacy this legislation provides. Meanwhile, unregulated stablecoin issuers could face steep hurdles unless they adapt quickly. The bill's passage through the Senate also puts pressure on the House of Representatives, where lawmakers are expected to take up the legislation in the coming weeks. If approved, it could be signed into law by the end of the summer, cementing the U.S. as one of the first major economies to introduce formal federal regulation for stablecoins. This development could also open the door for future crypto regulation, including frameworks for token classification, DeFi, and digital asset taxation. In short, this might just be the first domino in a much larger shift toward regulatory integration. For now, the industry is celebrating. The Senate's passage of the stablecoin bill signals that crypto is no longer operating in legal gray zones. It's being formally recognized as a legitimate part of the financial system. We'll keep tracking this bill's progress as it heads to the House and bring you updates on what it means for the future of crypto in the US and beyond. Stay tuned. In a move that could dramatically reshape the crypto landscape, Donald Trump is once again putting Bitcoin and digital assets front and center. And this time, it involves Congress. According to a new report from Forbes, the former president is preparing to rally political support around what analysts are calling a crypto price game changer, a proposed framework that could unlock trillions of dollars in market value. Trump, who's made headlines in recent weeks for disclosing tens of millions in crypto-related income, is now reportedly gearing up to champion pro-crypto legislation if elected again. Sources close to his campaign say Trump sees crypto not just as an investment opportunity, but as a strategic pillar of American financial independence and a powerful weapon in the fight against centralized banking and global surveillance. According to insiders, the proposed framework would push for greater clarity on crypto taxation, the classification of digital assets, and protections for self-custody wallets. It would also seek to roll back aggressive SEC enforcement, something that's become a growing concern under the current administration. The goal: to position the U.S. as a global leader in blockchain innovation, rather than a country falling behind due to regulatory overreach. And while this proposal isn't yet official policy, analysts believe it has the potential to ignite a major rally in Bitcoin and altcoins if it gains political traction. Crypto insiders are already buzzing. Some believe that with congressional support, Trump's plan could usher in a flood of institutional capital, similar to what we saw with Bitcoin ETF approvals earlier this year. Others argue it could reinvigorate developer activity, unlock innovation, and solidify America's dominance in the Web3 era. Of course, critics are skeptical. They warn that political promises don't always translate into real policy, and that tying crypto's future to one candidate is risky. But what's undeniable is that the conversation has shifted. Crypto is no longer a fringe issue. It's now part of the national dialogue. With the 2024 election on the horizon, and the broader market could soon be influenced not just by inflation or interest rates, but by campaign speeches, congressional votes, and White House policies. One thing is clear: Trump's alignment with crypto is not just financial. It's now deeply political, and as momentum builds, the markets are watching closely. Will this strategy unleash trillions, as some analysts suggest, or is it just another promise waiting to be tested? We'll be following the story as it unfolds. Stay tuned. Two of the biggest names in US crypto, Coinbase and Gemini, are reportedly one step closer to a major regulatory milestone, securing licenses to operate under the European Union's new MiCA framework. MiCA, short for Markets in Crypto Assets, is the EOS comprehensive regulation designed to create clear, unified rules for digital assets across all 27 member states. It officially takes effect in 2025 and is widely seen as a game changer for crypto firms looking to scale within Europe. According to new reports, both Coinbase and Gemini are actively working with European regulators and could be among the first US-based exchanges to obtain MiCA-compliant licenses. If successful, this would allow them to offer crypto services, including trading, custody, and stablecoins, across the entire EU under a single regulatory umbrella. For Coinbase, this move is part of a broader global strategy. The company has repeatedly emphasized its intention to expand beyond the United States amid regulatory uncertainty at home. CEO Brian Armstrong has been vocal about the need for clear frameworks and has praised Europe's regulatory clarity as a model for others to follow. Meanwhile, Gemini, founded by the Winklevoss twins, is also pushing to build out its international footprint in the USA. The firm recently opened new offices in the UK and Singapore and is eyeing Europe as a key growth market. Securing a MiCA license wouldn't just offer legitimacy, it would also unlock access to tens of millions of new customers across Europe. It would enable these exchanges to offer services without the need to register in each individual country, massively reducing compliance friction. Analysts say this is a strategic advantage as competition heats up globally. With the EU moving fast on crypto regulation and the US still lagging behind, many believe the center of gravity in crypto innovation may shift eastward. And these licenses could accelerate that shift. The bigger picture? As the MiCA framework becomes the gold standard for crypto regulation, companies that comply early could end up leading the next phase of global adoption. And with Coinbase and Gemini already in the pipeline, they may be positioning themselves as dominant players, not just in the US, but on the world stage. Whether this signals a broader exodus of best crypto firms or a new era of cross-border regulation, one thing is clear. The race for global crypto dominance is well underway. Europe is quickly becoming the playing field to watch. Stay tuned as we track this regulatory evolution and the impact it could have on the future of digital assets.
In a surprising financial disclosure that's sending waves through both the political and crypto spheres, former U.S. President Donald Trump has reported earning tens of millions of dollars from cryptocurrency ventures. The details, made public in his 2025 financial filing, reveal that Trump has significantly expanded his involvement in the crypto space, and it's paying off in a big way. According to the report, Trump has earned over 75 million laos from a combination of crypto-related activities, most notably through NFT licensing deals and partnerships tied to Trump-branded digital assets. This includes profits from the now well-known Trump digital trading cards, a series of NFTs that launched in late 2022 and quickly sold out, generating millions in revenue. But it doesn't stop there. Trump also disclosed income from crypto wallet services, token licensing agreements, and blockchain branding initiatives, signaling a much broader presence in the Web3 economy than many expected. What's especially interesting is the shift in tone. While Trump once expressed skepticism toward cryptocurrencies during his presidency, famously calling Bitcoin a scam, his post office portfolio tells a different story. Not only is he participating in the crypto boom, but he's profiting from it at a scale that rivals major influencers and even some fintech entrepreneurs. This financial disclosure adds a new dimension to Trump's public image and could have major implications ahead of the 2024 U.S. presidential election. As crypto becomes a bigger political talking point, with debates around regulation, innovation, and national security, Trump's deep ties to digital assets could shape both policy and perception. His involvement could also energize a segment of crypto-friendly voters who see blockchain as a path to financial freedom and innovation, especially if Trump leans into that narrative during his campaign. At the same time, critics argue this raises ethical questions. Is a former president profiting from unregulated assets? Is there a risk of crypto ventures being used to influence political power? These are debates we're likely to hear more about as election season heats up. What's undeniable, though, is that Donald Trump is no longer just a former president. He's now a major player in the crypto space, with millions to show for it. And as crypto continues to intersect with politics, finance, and pop culture, don't be surprised if more public figures follow his lead, for better or worse. We'll keep you updated as this story develops and as Trump's crypto portfolio and political profile evolve. Stay tuned.